Good evening, everyone. On behalf of ICICI Securities, I would like to welcome you to the Q2 FY2024 earnings conference call of Matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO, and Mr. Sushant Pai, the CFO. Over to Mr. Murugavel for his opening remarks. Thank you, sir.
Thank you, Abhishek Banerjee. Good evening, everyone. Wishing all a very happy Diwali. Despite Q2 being a seasonal quarter, we've achieved a 7.8% year-on-year growth on matchmaking billing. This was in line with what we had indicated during the Q1 call. In Q2, on a consolidated basis, we achieved a billing of rupees 117.1 crores, a decline of 6% over previous quarter, and a growth of 7.3% year-on-year. Revenue of 121.6 crore, a decline of 1.4% over previous quarter, and growth of 5.9% year-on-year. The key highlights for the matchmaking business are as follows. Billing for the quarter was rupees 114.9 crores, a decline of 6% over previous quarter, and growth of 7.8% year-on-year. Revenue was at rupees 119.2 crore, which was a decline of 1.1% over previous quarter and a growth of 6% year-on-year. We have added 2.6 lakh paid subscription during the quarter, which was a decline of 7% over previous quarter and growth of 7.4% year-on-year. The average transaction value for matching business increased by 1.2% over previous quarter and 0.4% year-on-year. This was in line with our customer acquisition strategy. I'm also happy to share that we have launched a new version of Bharat Matrimony app and website to delivering an enhanced user experience and functionality. We also enhanced capability to connect with matches over shared interests such as lifestyle hobbies. Now, people can find matches based on hobbies and interests. We expect this initiative to add further value to our customers. Now, coming to the marriage services business, revenue was 2.4 crore, a decline of 10% over previous quarter, and a growth of 1.6% year-on-year. We've been working towards achieving the break-even or profitability. So we are taking steps to make that happen. The EBITDA loss for the quarter was 2.1 crore, a down of which is down from 3.1 crore over the previous quarter. On the billing and revenue outlook for Q3, matching revenue year-on-year growth we expect to be a similar level as compared to Q2. On wedding services, revenue losses are expected to be similar level as Q2. Let me now pass on to Sushant to comment on the key profitability items. Sushant, over to
you. Thanks, Muruga. Our EBITDA margin for the matchmaking business in Q2 is at 21.3% as compared to 24.1% in Q1 and 23.1% a year ago. Marketing expenses are at 46 crore as compared to rupees 43 crore in Q1. In this quarter, the provision for the disputed Google service fee is for the full quarter. However, in Q1, it was only for 2 months. Along with some increase in marketing, this was the main reason for the decline in EBITDA margins in matchmaking business. Excluding marketing expenses, our margins in matchmaking is stable at 60%. On a consolidated basis, our EBITDA margins in Q2 are at 15.1% as compared to 17.2% in Q1 and 16.3% a year ago. Tax rate in the quarter is 24% as compared to 23.2% in Q1. Profit after tax is at rupees 12.53 crores, a decline of 11.6% quarter-on-quarter, and growth of 7% year-on-year. Our share of loss from the associates, which is Astrovision, is rupees 1 lakh. Return on capital employed annualized is at about 17% as compared to 21% in Q1. Our cash balance is at about rupees 337 crores. On the outlook for Q3 margins, our profit after tax in Q3 is expected to decline slightly on a year-on-year basis, mainly due to lower revenue growth and Google service fee provision. Also, just to recollect, in quarter 3 of last year, we had a one-time gain on account of land sale for rupees 5.8 crore. I would like to end with a customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statement that may be made from time to time by or on behalf of the company unless it is required by law. With this, we can open the floor for Q&A. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kaustav Bubina from BMSPL Capital. Please go ahead.
Yeah, hi. I noticed you had put up a disclosure that you've secured the domain name love.com or something like that for casual dating. So just wanted to understand where did this mindset change come from to get into casual dating, and what is the company's plans over here? How much by when do you start to see user growth in this space, and when do you really see this scaling? How much money will you invest in it? Do you plan to acquire someone, or do you plan to grow this organically? Whatever you can tell us regarding this.
Thank you for asking the question. So basically, we don't want to get into casual dating. I just want to get that clarified. We want to get into a serious relationship domain. So because what they kind of figured out was the casual dating in India, where there are players there in India in the casual dating space. There's also players like Tinder and all. They're seen as a frivolous and they don't stand for something meaningful. So our objective always been that help people to find the meaningful relationship. While matrimony is there, that people can come to the matrimony. The intent is very clear. They want to get married. However, we figured out there are a set of users who want to fall in love or want to have a serious relationship. We believe there is an opportunity in this space. So that's why we bought the domain love.com. The intent to launch the service in the serious relationship space. I think that's what love.com is attempting to do. So it's in line with our ethos and values and helping people to find the life partner. In terms of investment, the product may be launched maybe next couple of months. We're working on it. And it's too early to tell what is the level of investment you're going to do. So probably maybe next quarter you'll be in the position to give some comment on that, because at this point of time the focus on getting the product right, or you to understand how do you want to take the product forward, or marketing, other strategies. So we've not really worked on those aspects yet.
Could you at least share if you are going to grow this organically or you're going to acquire a company? Because your competitor, for example, I think a few years ago, a year ago, I don't really remember the exact time, acquired Isle. So, because, there's in this space, we had spoken earlier too on a private conference call, where we had discussed that, these homegrown serious dating websites or casual dating, whatever you want to call them, the homegrown ones, they just don't have it in them to grow beyond a certain level. UI bugs, all those issues taking into
answer your question, so sorry about it. No, we not intend to acquire anyone. So, I think that's not possible at this point. We just want to, because we are into a serious relationship. I don't think anybody in India who are in that segment. I think that's our understanding. So So we prefer to build it organically.
Okay, excellent. Thank you so much. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask questions. The next question is from the line of Anurag Purohit from Anive PMS. Anurag has dropped off. The next question is from the line of Ankur Jain. Please go ahead.
Hi, good evening. Thank you for the opportunity. I have two questions. The first question is on the merit services business. So I just wanted to know the progress in that particular segment. I mean, do you see yourself in a stronger position now to charge subscription from more number of vendors or the mandap owners? And what is the timeline for break-even that you have in the mind? That is my first question.
Yeah. See, the business, we are working on various fronts, be it on the product side, technology front, and value propositions. And while we watch Saga we integrated, we definitely see that some of the fundamental things to be addressed. So while working on this journey of getting some of the fundamental things right, value propositions right to the customers, we also taken a step to optimize the cost. So we see that the cost is going down. So we believe that somewhere in quarter 4, I think not the entire quarter, I think somewhere in quarter 4, we believe we can get to the break-even on a cash basis or get close to the cash basis. So that's how we are looking at the business getting service. Once you get to the break-even, once you get close to the break-even, then obviously we have plans to scale this business. But at this point of time, the focus is to optimize the cost, get the value proposition right, and get to the break-even. So which hope is sometime will happen next 4-5 months.
Right. Yeah, thanks. And the second question is a little longer question. Mm-hmm. It is about the telecalling process in both matchmaking and the wedding services business. So, see, what I've observed in a classifieds business that the moment a potential customer evinces interest by sharing the mobile number, there is a mad rush among the vendors to chase the customer, and it annoys the customer. So, one, I wanted to know how does that process work in the wedding services business of matrimony? Like, if there is a potential customer, do they share the mobile number? And what happens once they share the mobile number? Is it like disseminated to all the vendors who can call the customer? That is one I wanted to know. How does that process work? And the second question, again related to this telecalling hygiene, is by the company executives. So again, in certain classifieds business, there are targets which are given to telecalling executives, and once they get the details of a customer, they want to upsell some package to that customer, and they call the customer umpteen number of times. And somewhere in the Google reviews of matrimony, I found one review where a customer said that I had requested not to be called because I'm at work, but still, I get number of calls, and that really annoys me. So I wanted to know how does the company manage the hygiene when it comes to telecalling, where the executives are given targets to nudge the customer to buy a particular package, but at the same time, the delicate balance is managed so that it doesn't annoy the customer. So I wanted to know this both for wedding services as well as for matchmaking. Thank you.
Yeah, let me first talk about wedding service. The wedding service, when the customer are interested in availing the particular service or photography, for example, once you understand the customer requirement, the leads are sent to only limited number of vendors. So not too many vendors. Again, so that way it's not that customer is annoyed with too many vendors calling. However, the point I made just earlier, we have to understand what customer wants, what are the value points you want to offer. Is it the customer just want a phone call from vendor? In fact, you are just asking some other fundamental question also. I think that's something working on those things. But at this point of time, so to respond, leads are not, the customer inquiries are not from too many vendors. There's limit. That's where most of the classified service work. We limit the number of vendors that the leads is sent to. However, we are looking at further into it so that the customer is not annoyed with even a customer getting called for even say 4 vendors or 5 photographers. So that's something, because sometimes the customer wants 4 vendors also reach because it helps the customer to evaluate pricing and package to decide. However, instead of standard numbers, they're going for possibly we can optimize according to the customer requirement. Okay, send my lead only to 3 vendors or 5 vendors. This is something you need to work on it and improve. When it comes to matchmaking definitely is nothing like, there's a control. It's not that the telecalling executives can make unlimited number of calls. We have, close to 1,000 telecallers, and we have make good number of calls on daily basis. There's a limit. There's also provision for customer to set be it on the interface. Also, we send a SMS after a certain number of calls to give an option for customer to set do not call. The thing that one of the review what you mentioned could be one of the such exceptions that probably because could have not happened to telecalling, probably could have been some other process. There are multiple processes. Could be in a process failure at one of the calling. As far as general calling, there's no unlimited call, there's only limited number of calls, there's a provision. There's also communicate with the customer to ensure that the customer has a control over whether they want to receive a call or not. So it's not that the customer at the mercy of or not at the receiving end that they cannot stop the call. However, there are times people would when the customer are told they are not enable the DNB. I think when you're dealing with those people, there could have been 1 or 2 misses here and there. However, so these are exceptional cases, not the norm.
Right. Yeah, got it. Thanks. Yeah, I just wanted to know about the hygiene part of telecalling. Thanks a lot for answering this question.
Very important for us because for us the customer experience is paramount. We want to ensure that the customer is having a great matchmaking experience.
Thank you.
Thank you. The next question is from the line of Sonal Minhas from Prescient Investment Management. Please go ahead.
Hi, sir. Am I audible?
Yes.
Okay.
Yes, Sonal.
Good evening, everyone. Sir, just wanted to understand with regard to the revenue guidance which you mentioned that for Q3, I think you mentioned there is a revision in guidance for Q3. Just wanted to understand the subjective part of it. Why is that so? Why were the new billings basically down? And secondly, what is the outlook for the year as a whole, assuming Q4 is, maybe we can just extend this to Q4 as well. That's my first question.
So basically, if you look at the first 6 months, the growth in matchmaking around the 7.2%. So the quarter Q3 also looked a similar level of growth. While we are taking steps to move to much better growth, we are still not reached the double growth yet. We are still hovering around the 7% growth. We also expect the Q3 also the similar level of growth in the billing matchmaking. So basically, we are taking steps, but still still not able to move to that level of growth yet. So there are new initiatives or steps we are taking. We believe that as we progress, we can able to move to a double-digit growth. Yeah. Also, the Q3 is also in a way that, well, for us, both quarter 2 and quarter 3 are seasonal quarters because, quarter 2 had a lot of inauspicious period. Quarter 3, we'll have, again, some bit of inauspicious and festival season. So both Q2 and Q3 gets impacted in terms of the revenue.
Got it, sir. And so second question on this whole litigation with Google. Just wanted to understand, is the current EBITDA indicative of the margins that the business is going to have, assuming similar top line, or there are more provisions we need to take going further?
No, I think the provision will be at similar levels only. You want to add anything to it?
On the Google litigation, as you are aware, we have appealed with the division bench and the hearing is in progress. So on a best estimate basis, we have created a provision. The only difference is in quarter 1, there was only for 2 months. In quarter 2, the full provision has come. So a similar sort of provision will continue in the coming quarters. Therefore, we have said in the next quarter, our overall PAT levels will be slightly lower than what we have achieved in the same quarter of last year. And in last year, same quarter, we had a one-time gain on the account of land sale. And in this coming quarter, that will not be there. Despite that, we are saying it will be just slightly lower than what we had achieved in Q3. So the provisions will be very similar, given that our top line is also growing at a very, moderate sort of a pace.
I understand that. Okay. All right, sir. That's it from my side. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask questions. The next question is from the line of Anurag Purohit from Anand Portfolio Managers. Please go ahead.
Hi, good evening. My question is regarding revenue for this quarter, because historically our revenue, quarterly revenues always tends to be a percentage or two higher than the billings in the previous quarter. This quarter there's a 2% decline compared to the billings of last quarter. Any particular reason for this?
Yeah, sometime, because the billing of last quarter was 124.5, but the revenue was 121. It sometimes depends on, which month of the period where sometimes the revenue would have added up. So it's like here and there some changes, but it also how the package mix would also add to it now. So, yeah.
Okay. And Sushant, so PAT might be slightly declining in Q3 versus Q3 of last year. But how about EBITDA? Would that also witness some pressure versus last year, or there would be some momentum, particularly coming from the marketing spend point of view?
Yeah. So, even the EBITDA, we believe there will be a slight, decline mainly because the Google service provision fee affects EBITDA also.
Okay. But there won't be any counter from advertisement spend. I wanted to understand more on that, particularly because from competitive intensity point of view, Jeevansathi is now saying that there is some respite in their marketing spend, but we don't see similar in Matrimony's marketing spend. So just wanted to understand more on that, how that direction would move for future.
The thing is that on the marketing spend, definitely, Jeevansathi has reduced the marketing spend. In fact, they vacated some other market also. They continue to now invest in our one in two market, which is North India and West and the Maharashtra market. But definitely they reduce the marketing spend. But however, the other player continue to invest in marketing. Also, we see the marketing spend which is sort of reduced in North and West because of overall the spend has reduced in this category in those markets. But however, there's increase in marketing spend happening in other markets. So net, the competitive intensity in the marketing continue to remain, because while Jeevansathi definitely they have reduced the marketing spend. So if the other player also reduce the marketing, then definitely we also look at optimizing the marketing. At this point of time, because while there is a North and West reduced, but other markets, the marketing spend has shifted in orders, but overall the level of the marketing spend remained at the more or less similar level. I'm looking at not at the overall basis, I'm looking at there is other player also. So that way we continue to spend in a way, when there is some reduction compared to what is spent in quarter two, but it will be around the 45 crore range on matchmaking. So that sort of marketing spend will continue till there is some reduction in the marketing spend by industry players. So then what happens is
campaigns and all of that.
Yeah, Q2 increase the marketing cost in Q2 on account of we launched a new TV campaign, because we also launched a new product. We launched a new campaign on the basis of how to finding life partner based on hobbies and interests. When you launch a new campaign, there's average duration is higher, so that increases cost of marketing spend. So that was the reason for some increase in marketing spend on matchmaking.
Okay. So essentially Q3, there should be some respite on that front compared to Q2 of this year.
Yes, yeah.
Okay. And wanted to understand in terms of industry, because you are still growing on YOY basis. Jeevansathi's revenue are kind of now also plateaued at a certain level. How about Shaadi? What is your sense on that?
Actually, honestly, we don't have any idea about, because it's not a public company. We don't have any information about other players. Well, definitely given Swati, they tried various things. We also moved to the free model and they set up combination of free plus paid. The revenue has gone down. But however, so we don't have any information about other players. So we continue to take steps to grow our business. And while we are not moved to aggressive level of growth, but again, we are at 1%, but we are taking steps to see whether we can move to a double digit.
Okay. Thanks and all the best and happy Diwali to you.
Oh, thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask questions. The next question is from the line of Drisha from Carnelian Capital. Please go ahead.
Yeah, hi, good evening, sir. Just a bookkeeping question. In case I've missed, I wanted to know what is the amount of provision that we have charged on account of the Google litigation?
Yeah, see, due to the sensitivity involved, we are not disclosing any specific numbers. All we have said is on a best estimate basis, we have provided because Google has, certain tiers and all of that and where we fall in, so it's not a very straightforward thing. But broadly, the way we see is that if not for that provision in this quarter, our PAT margins would have been at least maybe 300 basis points better than what it is.
Okay. And so by when do we have the next hearing or when is the resolution expected on this front?
See, we don't know. It all depends on, how the court deals with it. Currently, the court is in the midst of this and we don't know. It has to, they progress, they don't give us the dates in advance, so we have to wait for it. And also in parallel, the case is also lying with the CCI as well. So that also needs to progress. So it will, I think this will all take some time as we go along. We need to wait and monitor.
Okay. And sir, also, like you alluded also in the previous questions that, the growth has been slightly, expecting, moderation in billing. So even like, the total number of billings has remained very sticky between, point like 23 to 26. So what has really led to this stickiness and, despite our putting in so much of efforts in advertising and all, we do not really see this billing or number of subscriptions going up. So is it due to, any, we losing any market share or what is it that is, basically not leading to the growth, expected growth?
Well, basically, while we are taking steps to, go to better growth and, and we are definitely putting our efforts, taking initiatives, but definitely growth is around the concept because this category, within our business, there are multiple services, be it online matchmaking, personal services, we also had a Judy. But there are some challenges as well. There are some segments, some markets, the profile growth is not happening. So the combination of multiple factors not helping us to move to the double-digit growth. However, the good thing that, we are the one player, continue to grow, continue to move up, while only continue making a profit. While our endeavor is to drive growth, but there are challenges there. As I said, it's a packet to packet. But we are definitely working on it, definitely taking steps now. So unlike other businesses, the matchmaking business also have a sector-specific issue because every year we have to acquire a new set of customers and, we have to convert them into paid users. On that basis, some segment, we are not seeing some growth also. So yes, so that's why the business is like, unlike other SaaS business, there is some base that we can continue to add to the base. It's more of people get married. So we're also taking steps like Loud.com and other initiatives. We hope all these initiatives are still progress will help us to move to double-digit growth. And that's on the growth. On the Google issue, again, just want to elaborate it. Yeah, it's at a multiple forum. It's taking time, and definitely we thought they would increase the profit, but this has come under profitability. So yeah, as Sushant said, it may take time, and we don't know how long it's going to take now. While companies are fighting, we hope we'll be able to overcome, and I don't know when. With Google will also do everything possible to get this revenue from players.
Sure. Thank you so much, sir. That's all from my side.
Thank you. Before we take the next question, participants who wish to ask questions may press star and one to ask the question. The next question is from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Thank you for the opportunity. The first question is on this Google issue. As a management, have we experimented in any micro market that if we take the users to a different page for payment, does that affect the user behavior? We can always segment the market in a small city and try it out. So have we done that?
Pulkit, yeah, it's something I've not tried yet because most of the payments in India happen in UPI. So we are not sure, because also most of the users in India are app users, almost 80%. So taking them outside of, because app in India have to go to website. So we are not done that. Definitely, something we have to figure it out. We have to work out beyond the case. We also need to figure out this experiment, see what kind of impact it will have and all. The pros and cons we have to evaluate. We have not done that yet.
So you've not done that, but is that something you're willing to experiment and planning to experiment?
No, definitely no, because obviously we don't want to, kind of give hard-earned money to Google. Definitely Google is obviously the monopoly. That's what the thing we are fighting. And, just forcing people to pay or, part the revenue is that, it's a taxing company. So, and be very vocal about the Google, taking the hard-earned money of Indian companies, even they're taking the money outside of India as well. So the government also losing revenue on tax as well. So we've been fighting, we're educating and, highlighting the issue. So obviously we'll be taking, various steps to see whether how to overcome this challenge.
Right. That's a good thing in your business model. I mean, you can actually experiment based on micro markets, based on small, different segments, different apps, and therefore see. I mean, and it will be a big thing because then you can roll it out and then, mitigate these costs.
Absolutely. We are not saying that we definitely will experiment. So far, because we lost, till recently, we are busy with launching the new version of matrimony.com. So we have to look at what are the various experiments, what will help us to continue our this revenue and at the same time able to overcome this challenge, either legally or otherwise also. That answers that quickly. We'll experiment, definitely. Various experiments.
Hello?
Yeah, please go ahead.
Yeah, I was saying that the app has been refreshed and there's certain updates.
Yeah.
We launched the app and, you made the marketing spends. Now, this has happened, I think, 2 weeks ago and as well as 1 month ago when I look at least the iPhone App Store. How has user behavior or engagement changed post that? Are you seeing any trends or any uptick in engagement at least? Is what I was trying to understand.
Sorry, that it was not clear in between. So we launched a new version of the app, definitely it's much better, but still there are some teething issues which are working on and addressing it. It may take another couple of weeks for us to set all the customers based on the customer feedback, fixing some more things, because it's a complete revamp. It's not an incremental changes what you have done. So for us, we launched a few weeks ago, but still there are the areas we need to improve. There are sections we need to modify. We're working on it. So maybe 1 month down the line, probably would have moved to a much better level. We definitely see also when we launch a complete new version, it takes some time for users to get adapted to the new version. So now we're seeing that there is improved traction and increased engagement. And also, one more point is that when you launch a new version, it also takes time for users to download the new version. It's not that all the users are migrated to the new version of our app. That also takes over a period of time. So we believe that probably 1 month down the line, we'll also address some of the small issues, and also we expect at that time a majority of users would have downloaded the new version of the app.
Understood. Got it. Thank you so much, and all the best.
Thank you.
Thank you. We would like to remind participants that you may press star and one to ask questions. As there are no further questions from the participant, I would now like to hand the conference over to the management for the closing comments.
So thank you so much, Abhishek Banerjee, and thanks once again everyone for joining the call. Once again, wishing you all a very happy and prosperous Diwali. So look forward to staying in touch. Thank you so much.